I just want to bring it back to March when Pimco was saying that they saw some of the worst outflows for the firm in 5 years after the shock that is of the coronavirus pandemic. Many was due to the retail side of things, which were staying in the sidelines. It seems like flows have stabilized now. What were you seeing back then in Asia, and have things stabilized in Asia yet?
Sure. Well, thanks very much for having me. And it was certainly an unprecedented period in March. And as a fixed income manager, our first and foremost is to be able to provide liquidity to clients when they need it. And clients did need it in March, and we were able to provide them that liquidity that they needed at that period. Fast forward to today, we have seen flows stabilized. We have seen clients pause a little bit, and then really we've been engaging with them on what is next for markets, how can they navigate this next coming period, and importantly, where do we see value going forward, and we think this is incredibly important, in particular for active management fixed income, where we see a very uneven recovery coming our way, and so important to really just distinguish between quality in the market so that clients can be protected and continue to earn.
And we've seen just the incredible amount of bond issuance all around the world. China in particular, we saw bond issuance go gangbusters. Central banks around the world are also buying up bonds to fund fiscal spending. This potentially is a very interesting time for Pimco right now. Kim, how much is the firm really participating in that?
We're very active, in fact, obviously following all of the central bank programs and understanding what that means for the market. We think that they acted swiftly and with size, and will continue to do so to help stabilize the economy, which we think is important. And as you mentioned, we are seeing issuance come to market. And again, as a bondholder and as an active manager, it is a really important time because we are able to, as a large manager, interact with some of the issuers and make sure that we've got strong protections, covenants, and so that the debt that our clients are investing in will provide strong protections going forward through this period.
Kimberley, Tom here in Beijing. Which sovereign bond markets are appealing now as you try and navigate the negative yielding debt across the globe?
Well, I think in terms of just a safe haven, the U.S. still continues to look like an important safe haven there. I think with rates where they are, clients are increasingly looking out beyond sovereign debt into high quality areas of the market. Of course, the agency mortgage market and related parts of the market there, and then beginning to see some value in high quality credit. And diversified credit is where we're seeing allocations and where we're helping clients move forward.
And there is obviously yield to be found here in China. It's something that a lot of investors we talk to say they find attractive. Is this something that you're adding exposure to now? Are your clients keen to get more exposure to China's credit markets?
No, I think in general, Asia credit continues to look reasonably attractive. I think the important part that we would emphasize is you want to be high quality, you want to be selective in where you're allocating to. Obviously, China's a big part of that market and continue to see pockets of value, but it's not valued equally. And so important to be able to parse through the companies that are going to be strong performers versus those that are not.
The term we keep hearing now, Kimberley, is debt monetization. That seems to be creeping here in the region, from Indonesia to New Zealand. What do you make of this phenomenon right now? Is this really an opportunity for Pimco or a potential threat here for traditional mechanics when we're talking about bond markets?
Well, it's something that we're obviously watching very, very closely, and we have experts around the world in terms of our deep bench of people looking at both the macroeconomics of this and then the country specifics around all of this. So we think it's something that is going to be important throughout, but again, an opportunity to be able to protect portfolios where we see risks as a result of these regimes, and and then areas where we see value. So again, trying to help clients actively manage around some of these phenomena that are popping up. But we have not seen them play through yet, and we will be monitoring them very closely.
Okay, and we were just talking to our colleague Steve in Engel about the situation here in Hong Kong now. For someone who lives and invests in Hong Kong, Kimberley, are you concerned about this national security legislation that's been introduced by Beijing and bypassing the legislative process here in Hong Kong, and what it could mean for Hong Kong as an international finance hub?
Mm-hmm. Well, we fully appreciate that this is a very sensitive issue for all parties involved, for our business and for our clients. Right now, though, we remain very, very focused on helping clients navigate through this extraordinary dislocation that we've seen economically and socially, and help them with their portfolios. With respect to Hong Kong, we remain very committed to being here. In recent years, we have made meaningful investments into our business, including building out a trade floor here, investing in portfolio management and credit research talent to help, particularly with Asia credit, as we see that as a continued area of focus for our clients. And we've invested more broadly in the team. So we continue to have high conviction in helping clients here and the opportunity set that we see here in Hong Kong, as well as its proximity to important markets like China. And so for these reasons, Hong Kong is a strategic aspect and a strategic focus for Pimco.
ESG investing was a big trend, has been for a number of months now. Does the pandemic accelerate that trend, do you think?
We think so. So around the world, certainly we've seen an uptick in ESG interest. We've seen an uptick here in Asia, but we do think that the pandemic will accelerate ESG trends, and for a couple of reasons. I think one, really holistically and fundamentally, we've seen that this pandemic is a broad social issue where people have realized how interdependent and how interconnected the world is for some of these topics. So a focus on those aspects, you can translate that into issues like climate, which has a similar, broad-reaching, challenge. And so we think that that will be of heightened concern, for people. You also look at how this has been dealt with by companies, also from a social perspective, in managing their own people, keeping them safe, and managing, clients, supply chain, all of those things where a lot of best practices have surfaced with respect to the use of technology and flexible work and all of these things that we think will be important drivers for the future. So it's for these reasons that we think that ESG will continue to accelerate. And on the bond side, where ESG is a relatively new phenomenon vis-a-vis equities, this is a really exciting time, we think, for ESG and for Pimco, and particularly because you're really going to have an actively managed as you look through, those companies that are doing things that are consistent with ESG standards, and frankly, those that are missing the mark.